Yay, I'm so happy to see you guys came back from the coffee break. I was wondering, there's so much activity happening back there. So happy you guys made it back for our last panel for the day. And rumor has it that someone will be tap dancing before we close out the night. So I don't know. I don't know if it's someone from over here or over here. I don't know. So we'll see if that actually happens. That's a rumor, though. So don't hold me to it. So we have a really wonderful panel up next. We're going to be talking about lessons learned. As you know, we've gathered together as innovators, as builders, as creators, to really come together to look at what are some of the issues and opportunities in the industry. And so I love the fact that we're going to be talking about lessons learned as we close out today. And it's about finding trust in Web3 and embracing industry transformation. I would like to welcome to the stage Massimo Cervesato from Mastercard. Welcome. Let's give him a round of applause. And he's followed by Usman Ahmad from Zodia Markets. Welcome to the stage. Stephanie Lheureux from Euroclear. Welcome to the stage. Mike Kuehnel, welcome. Great to have you from Flow Traders. Welcome, Mike. And don't let this non-photo deceive you, because he is here. Andreas Naumann. Andreas Naumann from Moody's. Welcome to the stage. And watch for the fireworks and possibly tap dancing when they're done.
Thank you. The tap dancer is wearing a white hat. Just saying. Good afternoon, everyone. Welcome to our panel discussion, Lessons Learned, Finding Trust in Web3 and Embracing Trust in the Industry and Transformation. My name is Massimo Cervesato. I'm Director of Blockchain and Digital Assets at Mastercard. Honored to be here today at Proof of Talk. Honored to be here in the city of Paris, which is actually embedding itself more and more into the blockchain industry and obviously becoming a little bit more of a crypto hub. Following blockchain development, following MiCA regulation, following quite a lot of crypto players, native and not, that are establishing themselves, establishing a presence in France, in Paris, and across Europe. So I'm from Mastercard. At Mastercard, we also sort of deeply committed in driving innovation within Web3, within blockchain, and we essentially recognize the transformative potential of these technologies to create a more secure, more transparent, but essentially a more efficient financial ecosystem, right? And I guess these principles are crucial not only for fostering consumer trust, confidence, but also for achieving regulatory approval and industry-wide acceptance. And so today we've got a distinguished panel of guests and experts who will be sharing their insights and thoughts on how do we navigate this evolving landscape, and how do we drive industry transformation. So without further ado, let me introduce you to the panelists, and I'll leave the floor to them to do so, starting with Usman Ahmad, CEO and co-founder of Zodia Markets, Stéphanie Lheureux, director at Euroclear and also overseeing blockchain and digital assets initiatives at Euroclear, Mike Kuehnel, CEO of Flow Traders, and Andreas Naumann, Managing Director, Global Head of Relationships Management at Moody's Rating. Andreas is also a member of Moody's Global Digital Economy Leadership Group. Over to you for a quick intro.
Thank you, Massimo. Delighted to be here. So, Usman Ahmad, I'm co-founder and chief executive of Zodia Markets. Zodia Markets is a digital asset cryptocurrency trading business, founded originally in 2021. And backed majority backing by Standard Chartered, the global bank. So we have been born of a bank. The first, I think, probably one of the very few trading businesses in digital assets that's backed by a global systemically important bank. And having been born of a bank, the trust area was absolutely critical and was a crucial part of the origination story of Zodia Markets. So having to obtain regulatory approval was actually secondary. Having to go through the group and board risk committees of a bank was the primary hurdle that we had to get through. So the regulators were actually, relatively speaking, easier in that respect. But look forward to sharing some of those insights with you over the course of the next half an hour or so.
Hi everyone, I'm Stéphanie Lheureux, so I'm head of Digital Assets Competence Center at Euroclear. Euroclear is not fintech, it's an FMI, it's what we call a CSD, Central Security Depository. So we are a financial market infrastructure sitting in the middle of the infrastructure and taking care of the custody and the settlement of securities. We have several domestic CSD and we have an international CSD doing the link between the different markets and providing access and investor reach for our ecosystem and all our participants. Just to give you an idea of magnitude, because this is important after that when we are talking about blockchain and the disruption it can create in the capital market. We have in our custody 40 trillion of assets, the equivalent, and we're settling the equivalent of the world GDP each month in our books. So it's kind of massive, and we'll see how we can see and adopt this kind of disruptive technologies for us as well.
My name is Kuehnel. I'm the CEO of Flow Traders. A real pleasure to be here today. To Flow Traders was founded 20 years ago. It's a publicly listed company listed at Euronext in Amsterdam. And since the inception of the company, we have very much built a very strong business proposition focusing on ETPs. So we are one of the globally leading market makers in ETPs. And over time, we diversified the business and put more and more effort onto crypto and digital assets. It's now our 8th year where we have built a global team, and being publicly listed and fully regulated, the engagement with regulators across the globe has been one of the top priorities for the firm. And I'm keen to share some learnings and experiences on how to build trust also today. But more importantly than that, I feel that industry-wise, we are at a very pivotal point. And the pivotal point is joining forces across the planet, across investors and market participants and regulators to understand what we can really build. So I'm a deep believer in building financial markets that are significantly more efficient, more transparent, and more, twisted towards creating benefits for people who are part of these markets. And one element is also the ability to embrace financial assets and financial investing for people on this planet who have not yet been part of it. So the role of the market maker as such is much bigger, and I'm keen to share a few bits and pieces that, in my view, really are the foundation for building trust in financial markets and society more broadly.
Thank you.
I need your mic. So, first of all, thank you. If you are here at 5 o'clock, you have real interest, so thank you for that. And the man without a picture, my name is Andreas Naumann, Global Head of Relationship Management at Moody's Ratings and also member of our Global Digital Leadership Team. I don't qualify as a crypto native, so I'm a boomer, clearly. It comes with a privilege, and this is where I start, so 30 plus years experience in credit and capital markets, so I could see Web2 actually evolving out when the dot-com boom or bubble burst, and then Web3 after what we call the GFC, the Great Financial Crisis. If you believe the story, Bitcoin, the genesis, was actually a result of the Great Financial Crisis. So that's a personal level. As a representative of Moody's Ratings, trust resonates extremely well. What we try to do, we try to bring transparency to credit and capital markets by providing ratings and research. In this space, it's a bit out of the comfort zone. We nevertheless published, meanwhile, 160 research pieces on digital assets and DeFi. And we're also here to explore the scene a bit more, to connect, like you said, and to learn how we can be helpful. Thank you.
Thank you, Andreas. And actually, I heard someone say that Andreas looks a lot better in person than on his picture. So that's one good news. Thank you very much for the introductions. Let's kick off maybe with a soft and easy question to start with. Usman, I'm looking at you here as the CEO and co-founder of Zodia Markets. How's your company leveraging Web3 technologies to enhance the security and transparency of digital assets trading for institutional investors?
So, as I touched upon in my introduction, we're born native Web3. However, we're born native Web3 into a regulated financial intermediary as a parent. So that is an interesting challenge, but also an enabler for us to help bridge the movement towards digitization. And I think that movement is inevitable, and it's an area that unfortunately is not going to be as fast as many of us in the industry and the ecosystem would like, but it is, in my opinion, going to happen, and it's going to happen with the right firms, the right partners, the right institutions working together, collaborating and driving change, engendering trust, because ultimately, whilst as Andreas touched upon, the genesis of the Bitcoin white paper was essentially a lack of trust in banks. Ultimately, unless I'm mistaken, everyone here still needs to pay their bills. And they need to pay them in the real world. They can't, as yet, pay them in the metaverse, despite some people's approach to that. And ultimately, that bridge is a critical part of growing and enabling. As I touched upon in my intro, being born of a bank means that you're having to run through risk frameworks, having to get approvals, having to get board-level sign-off, having to get attestation from the group CEO to launch the business, has meant that we went through a journey to get ourselves out there and then prove commercial viability. That journey continues, and that journey continues by hopefully taking partners, clients, investors, and ecosystem participants with us on the journey, because it's not going to be one firm that moves this forward or engenders trust. The big thing I'd always say about trust is if you have to keep telling everyone to trust you, there's a little bit of a problem. And so what we've got to do is prove out how this transformation is going to move forward and how we're going to enable adoption through utilization of new technologies, new solutions that will ultimately transform the way finance works, just like the internet has transformed the way that data moves.
Thank you very much. And you mentioned quite a lot the notion of partnerships and the power of partnerships, to build sustainable business models. Let's pinpoint that for a little bit later, because I'd like to pick your brains on that notion. But building on this, Stephanie, maybe over to you. How do you see some of these aspects sort of being integrated into traditional financial systems, especially at Euroclear, and what are some of the challenges that you've encountered in doing so?
I used to work for a company, a software editor, and that has equipped all the banks in post-trade solutions. So I spent many years building solutions, trying to automate all these processes, the post-trade processes, removing or automating the reconciliation and removing some hurdles. And then I started to hear about blockchain. I thought, okay, it's going to change everything, remove the need of intermediaries, the need of reconciliation, etc. Today, I'm working for Euroclear. Euroclear is in the middle of these infrastructures and is so one of these intermediaries that the technology is supposed to be able to remove. I don't think it's going to be the case, obviously, but still, I strongly believe that blockchains can deliver a lot of these benefits to the market and to the market participants, and that we have a duty to look at that and see how we can improve the operations, bring some benefits in terms of efficiencies, transparencies, traceabilities, real-time settlement, all these things that we hear about blockchains that can bring a lot of benefits to the market participants, and ultimately issuers and investors. So in Euroclear, we are looking into that, and we are looking how we can help the market embrace these new technologies and deliver these benefits. We have done several things in that perspective. First, we have our own digital security issuance platform, and we have designed it in a very specific way, which is sometimes a little bit strange to the market when we are discussing about that. If you're a little bit aware of what's happening in this space when it comes to digital asset securities, a lot of players have started to experiment for years in silo, building the full process, the full value chain in smart contract, from the issuance to the trading and secondary market. And then we have a liquidity issue because nobody is connected and we're creating this fragmentation. So we were thinking this is not how we can deliver these benefits. Of course, the benefits of blockchain can only be unlocked at scale and when the full value chain is in smart contracts. But if we want to be able to go there one day, we need first to help the market adopt these kind of technologies. So we have decided to build our own platform, which is connected to our traditional system, which means that you can issue native digital securities, and then you can have the full issuance, the distribution, primary distribution, do a DVP on-chain, have cash on-chain, all this stuff because of who we are. But then it is going to circulate in traditional rails, which means that anybody can invest seamlessly into traditional digital securities. So it seems strange because you are making a kind of de-tokenization in a way. You have a digital securities which circulate on security accounts, but that way an issuer can issue a digital security, a real one, with big amount, and then you can have all the services of traditional world in terms of liquidity, collateral, third party, all this stuff. So that's the kind of things that we are doing and that we are doing to help the market progress in their journey of adoption for digital asset securities. There are a lot of other things, but I don't know how much time I still have. I can speak for a very long time, so you can just stop me if you want, and I will.
I would never do that, but thank you very much for your perspective. And I see a lot of nodding in the room and also on the panel, which is good, but let's also disagree and challenge each other a little bit. So this is time for curveball number one. And this is an open question, so whoever wants to pick it up, please feel free. So, but essentially, in your view, what is a widely accepted notion or belief within Web3 that you completely disagree with, or you don't see any future in the upcoming 5 years? Whoever.
I can take it. So I naturally come back to this question, how do we feel about adoption? And how do we feel about embracing the same view on the benefits behind interoperable markets, for instance, and tokenized assets with significant benefits for investors? I feel this notion we all share, and to a certain degree we also leaning in, trying to understand what the bits and pieces are we need from different parts of the market. I'm not talking about the regulator, that's on top, but different market participants with their proposition. And as you just highlighted, I feel Euroclear is making, definitely a right step into the right direction. What I feel is yet the challenge in the broader adoption is that there are a variety of business cases out there that are not yet, seeing the same, let's say, target. And there are differences in, also creating a vision on how to scale it. And that creates complexity. And it creates complexity not just for the regulator, it also creates complexity for the core beneficiaries, if you will. That is either the retail client or the institutional client who also needs to manage risk. And when it comes to risk, and one piece that's extremely important in my mind is to understand the importance of dedicated investment streams for the next 5 years plus. So ideally, we all identify a standard, and let's debate also today what that standard could look like. And then we are leaning in as a community and really make sure that this is not a single adoption in a single market and not an idea that only works in the US or in EMEA and not in Asia, but a truly global adoption that really creates a full innovation curve that hits markets end to end. And I feel we are not there yet. Let me be critical about it. I think it's exciting to be part of this innovation curve, right? So that's why we are here today. But I feel out of experimenting, which we did over the last few years, we are now at a very pivotal point where we can be excited about Mika coming to Europe and can be excited about what we have seen in January with the Bitcoin ETP adoption and the billions that went into the product. But ultimately, I'm asking for more. And more is, and this brings me ultimately directly back to trust, how can we make sure that we are not talking about benefits people can't relate to, but really deliver use cases and proof points over the next few years And I really like the statement at the beginning, let's not talk about trust, demonstrate it. I think that is the gist of it.
Thank you very much. And institutional adoption, regulatory framework, use cases that are relatable, these are all things that essentially would serve as catalysts to broader adoption, to global adoption of these technologies. Again, we'll pinpoint that and come back to it in just a moment. Last but not least, Andreas, from your perspective and a specific one, right, at Moody's, how do you see regulatory frameworks, because we were just on the topic, evolving to support more trust in the Web3 ecosystem? And what advice would you give businesses that are essentially trying to navigate this very complex landscape?
Yeah, and Massimo knows what I will say when it comes to advising, because we're not advising. But let me first echo of what some of you said. I mean, we see 4 key hurdles to wider DLT adoption. So one is interoperability of the various systems or platforms. I mean, you mentioned this, and I think a good deal of the 2 days are around this. I mean, I saw very interesting solutions and advances in that part. The second one is really the lack of a viable digital cash option. I'm pretty sure we'll talk about cash on chain a bit. Third one, technological risks. And the fourth one, actually regulatory uncertainty. So and that leads me to the point, Massimo. So if you reverse this argument, if you manage to create a clear and comprehensive regulation in that space, I mean, you can actually create certainty for market participants, and this way it could create trust. So there is a bit the could underscored, because it's not a guarantee at the end. So and what I will do, and regulation is a pretty serious topic, as everyone in this room knows, so I will look at my notes from time to time, and I will also comment more on really DeFi as a subset of Web3, because I think the question was a bit wider framed as Web3, so let's talk a bit more as DeFi. So, few observations we make. The first one is, no surprise to everyone and anyone in the room, is the regulatory landscape is still evolving. So that's a long burner and a long process. So, second part, regulators worldwide typically perceive the technology, so blockchain technology, as distinct from crypto assets. That's the second one. With some regulators making sure they bolster the safety of the DeFi ecosystem by regulating activities rather than entities. I mean, MiCA in a way does both, but it's still important to keep that in mind. So, and that also means, as a consequence, regulators are applying similar regulatory outcomes to comparable risk in DeFi and the broader crypto finance space. And this mirrors approaches we have seen in TradFi, so in traditional finance. So, I mean, there has been significant strides and progress in the digital finance space when it comes to regulation. However, I mean, the development and implementation of a more comprehensive framework for digital finance requires years. I mean, to be quite clear on that, possibly integrating at the end directly with DLT. So we believe achieving international consistency in regulatory and supervisory approaches is crucial. However, we also observe differences or different approaches, which then in reverse, and some of you might have experienced this, can lead to migrating resources. Does mean migrating human resources, migrating financial resources to places with a more lenient regulation. So just keep that in mind. And we believe the trajectory of crypto asset class in the forthcoming years will be markedly influenced by the pace, extent of harmonization, and regulatory term, prudentialism embraced by regulators.
Just to interrupt very quickly, because I think Usman had a comment on that one. I saw him cringe a little bit.
I wouldn't say cringe. I think I found the use of the term lenient regulatory frameworks interesting. From experience, I beg to respectfully disagree. I think a number of firms went, most notably FTX, went for a non-regulatory approach. There's many others that I could also mention, but they're an easy target. Whereas I think value really comes from regulatory clarity rather than regulatory leniency.
Yeah.
So
I fully agree.
I was just interested in the use of the term, so maybe I'll just
Well,
come back to
it's
you.
maybe the way rating agencies like to phrase something, because we have to be a bit, mindful of how we phrase things. But thank you for adding this. I want to add one thing here on the navigating the landscape. I don't want to duck, but obviously we don't give advice. So, few observations, which is more best practice, and honestly, it's common sense. First of all, it's evolving. So that means you need to stay close, you need to be quite proactive. And there are a few ways to do this. I've seen fantastic blog posts, I've seen fantastic websites really being up to date when it comes to regulatory developments. I'm pretty sure if you're interested in that subject or if you're affected, you will use this. Second part, associations. You can leverage industry associations. I don't want to name any one, but there are clearly blockchain associations, there are digital finance associations. You can use. Third part, engage legal experts. Again, this is a tricky field which requires really attention to detail. And a co-pilot summary of a 150-page MiCA regulation may not get you to the result. And maybe surprising to unregulated entities, have an open dialogue with regulators and try to engage with them, which includes potentially running some sandbox exercises. It's a win-win. It's a win for the regulator because they are very keen on learning a bit more about this space. And on the other side, you can engage with a regulator in a controlled environment. So I'll leave it here.
No, thank you. And just to sort of not close off, but conclude a little bit on those points. Obviously, the answer is neither nor. It's both. It's complex. It's deep. But if you had to answer black and white, yes or no, does regulation, and thinking about MiCA, but not only, is it a catalyst? Does it legitimize blockchain? Or does it burden, does it stifle the adoption of new innovation? And maybe, Mike, you can give us the short answer or whatever you feel. There's no right or wrong answer on this one, but...
Okay, we can maybe take back the bets. But I'm a firm believer that it needs to be a catalyst. And there are several reasons in my mind why I say that. So the first is my personal reaction after the FTX fallout and how the world reacted to it. And it's quite hard to understand how much pain that created, but we have to acknowledge on a trust basis, it was one of the biggest shocks to markets. We got out of it as a community in a good way, but this question on how do we feel about the non-regulated part, where prior to that we would have said we need a speedboat when it comes to innovation. And let's make sure that the speedboat drives great ideas, and once these ideas become actionable and can create a scalable opportunity, then let's embrace regulation. And now I feel we are looking into, we need transparency and we need regulation. So this brings me then to my second point, what kind of regulation? And I really like the point you mentioned on more harmonization, because what has changed for us at Flow Traders is that we really re-engineered our engagement strategy with regulators globally out of a controlled mindset into, or controlling mindset into co-creation, in spending more and more time on how do we feel about the end picture, the target picture, the point of arrival, how do we feel about the journey there too, and how do we want to make sure that this is indeed harmonized as much as possible. And this brings me back to the standard, finding a standard. And what I sense is this is definitely not the more easy route. It is significantly more difficult, but at the same time, I think we also need to remind ourselves what is at risk. And at risk is that we are deep diving into an innovation curve across financial markets that is uncontrolled. And one thing that really bothers me is innovation can only happen with proper funding. And if you go through all the different archetypes of investors, they seek clarity. They need clarity. So if we are not, as members of this broader community, are able to connect the dots, the funding stream will never come, which we really need in order to build it. And then my last point on, and this brings me a bit back to adoption, I feel that I do still meet people who feel that regulation is just a burden. And I don't feel that this is the right tonality anymore. Because in a way, we need to prepare our minds that we are able to talk about risk and that we are able to talk about mitigation and that we make it very tangible towards the regulator how it could work and will work. And I mentioned it before, I feel this discussion is more co-creation, kind of two architects coming together and talking about it, then I have an idea, bring it to you, and do you like it or not? So I feel the pressure is significantly higher, but there is a meaningful benefit behind this, in my view.
Absolutely. You mentioned a lot co-creation, which is a good segue to move away from maybe the regulatory topic into one that I promised I would bring back on the table. Usman, looking at you, partnership and the power and the role of building strong foundations, building strong partnership or leveraging partnerships, to build sustainable growth within this ecosystem. How important is that in your business or across the industry?
Zodia Markets is a classic example of a partnership. So I talked about being born of a bank, but the two founding partners of Zodia Markets, one is a bank and the other is a crypto firm. The bank recognized that it had the opportunity, the network and the capability to make a difference, but also recognized, having tried to put a Bitcoin transaction through its systems, that it was not equipped to do that. Rather than trying to go and build everything independently, they looked for the appropriate partners in the ecosystem to help them learn and accelerate to hopefully long-term drive adoption. That's one example. That's kind of my business, and I can talk about that endlessly because I'm the co-founder. But actually, partnerships more broadly adoption requires partnerships. Stephanie touched upon it earlier, where she talked about building the full value chain of an ecosystem. Now, any one firm can try and do that. The chances are they're going to fail. Right? Chances are, if you try and build something that you don't have expertise in, it's going to be very, very difficult, and you're not going to really have credibility. So partnerships, and the right partnerships, engender credibility. They provide a degree of clarity, which was a word used earlier. But ultimately, there's many participants in financial markets. There's many parts of the value chain. There's many parts of the ecosystem. And actually, it requires those participants, those experts. Right? Mike runs a market-making business. Right? That's not trivial. Right? For someone to go and run a market-making business, right, having been established for 20 years and running a very successful business, why do I think I could go and run that business tomorrow? Well, why would I not just partner with Mike and leverage his expertise? Stephanie's part of Euroclear, right? And basically runs financial markets infrastructure for $40 trillion worth of assets. That, again, a great opportunity to partner. BlackRock have demonstrated that with their ETF, right? They didn't, they are one of iShares is one of the biggest ETFs in the world in terms of scope and size and scale. They're one of the biggest asset managers, but they partnered with a firm called Coinbase. Right, to get that going, and they use that as an enabler to demonstrate the areas that they didn't know, because Larry Fink, not that much before the ETF was announced, didn't really believe in Bitcoin. And now he's got the biggest, fastest growing ETF there's ever been in his history. So I think the enablement aspects of engendering trust require participants to work together. My final point on this is, having spent nearly 20 years in traditional finance, the one thing was hammered into me loud and clear was banks don't work with other banks. They don't collaborate. Having spent 6 years in crypto, you have to collaborate. There's the rising tide that lifts all boats type agenda. The ecosystem right now, even $2 to $3 trillion in cryptocurrencies, is tiny. And it's got a minimum 10x upside. on that, just in cryptocurrencies alone, not talking about real-world assets and other bits and pieces. There's a huge opportunity that is only going to come by virtue of partnering and driving change and engendering adoption.
Thank you. Banks don't partner with banks. That's one I'll keep in mind, man, because it's...
You can quote me on that one, Massimo.
I'll quote you. Thank you. I've only gone through pretty much 50% of the topics and questions, but we're running out of time. I do want to leave a little bit of space for Q&As. But, Stephanie, curveball number 2. This is not one that you've been briefed on, but feel free to go anywhere you want. And kind of wrapping up as well, right? What is one prediction on the future of Web3 that you think will surprise most people? I look at Stephanie, I look at everyone. This is wrapping thoughts, so anyone's welcome to contribute.
I wasn't prepped for this one, huh?
No, you weren't. No one was.
Okay. Okay, let's imagine what is going to change a little bit. So today, something which is very surprising and very new for financial institutions, financial market infrastructure like us, we are building systems that are there for decades. And we build it to last, and we are resilient by nature, and this is something which is really at the heart of what we are doing. And we are today in a world where the pace of innovation has accelerated drastically. So it's a big change. And when we are starting a project, building a project, we pick a technology because we need one, depending on what we are trying to build, depending on the regulatory framework, what we need to achieve, what is compliant, whatever the constraints. So this is a kind of thinking. And then there's a time to build, and it's not a startup, it's a big financial infrastructure. So you need some time, it takes time, and then you finally deliver in production, and your technology, is it still the good choice? We don't know. And it's moving so fast that it's very difficult to keep, to stay, and then, so probably today we can see that a lot of financial institutions, mainly the intermediaries, so the custodians, the banks, the CSDs, are building on private blockchains. And it's mainly because it is the right choice today to be compliant, to be comfortable, and and have trust in the technology, have trust in the fact that the data are secured, are confidential, are private, that you have the finality of your transaction, all this kind of stuff that we have at heart. And then today, what we can see is there is a lot more of let's call them global ledger, unified ledger, public permission ledgers. So my prediction would be that tomorrow financial institutions would probably go more and more on public permissions ledgers, provide some service, probably the same kind of service, but in a very different manner because of the decentralized nature of the technology. That's my personal guess.
Thank you very much. You almost sounds like you were briefed on this one. I promise she wasn't. Mike, Andreas, any closing comments? Do you agree, disagree?
Yeah, I liked your question a lot.
Do you want another curveball? I've got plenty.
I liked your answer as well. But I give you a very personal touch on it. What I do anticipate, expect, and hope for is that out of continued engagement for a few more years, we get to a point where we all get it. And by all, I mean all the market participants, including the regulators, and then have a spiraling event in a good sense, that we are driving innovation with a clear understanding what the point of arrival needs to be, and feel also the responsibility we have in order to get this right. And I come back to the benefits I talked about at the very beginning. I mean, how cool would it be to dream about financial markets? And I now speak out of the perspective of a market maker, where we're connecting thousands of different liquidity pools in real time. But how cool would it be to, as a retail investor, to trade tokenized real estate in China and go into tokenized bonds in the US in a split second? And you get the most fair price and the most transparent execution and most reliable execution. That's what I like to dream about, because that is a good mission in life. And if we are all old and look back and we're being asked what we did, we can state, well, it started in Paris. Maybe not started, right? But Paris was part of it, and many more discussions were part of it, and that was the impact. We as members of this community had. I think that's quite also important to acknowledge.
Thank you very much. I just want to look at the crowd and see if there's any questions, any thoughts, anything you want to share. It's either that or Andrea will wrap up with this famous tap dance. Anyone? Andrea, you want to leave any closing remarks?
No closing remarks. I mean, you are in charge, but I need to add one thing, please. Maybe that's more personal than my boomer hat. I think we will be surprised by much better user interfaces. And I've seen a bit because I think this is another stumbling block. I mean, making Web3 accessible is also something. And I know many firms are working on this, and I personally believe you will be surprised by the pace. And this is also my remark to ETF Bitcoin. I know many people were saying, look, I mean, some people don't get it, what Bitcoin really is. ETFs made it just so much more accessible and understandable.
Yep, and I think we could have an entire new panel for another hour about exactly that, right? Decomplexifying user journeys to make it more accessible, more adoptable. But we'll leave it at that. Thank you very much, everyone. It's a wrap, and well, enjoy your evening.
All right, that was great. Thank you so much, panel and speakers. Access is such a key term to leave with, and improved user interface can help with that. So I want to thank our speakers again, and we're going to see you guys on the front stage for closing remarks. Really appreciate you guys joining the Mona Lisa stage. I'll also see you tomorrow morning, and hope you really enjoyed the insights that were shared today. I'm Nova Lorraine. Thank you.